What do you think will happen to Tesla stock by next year? Today, Tesla stock is trading at around $150 per share, which made people wonder what the future looks like for the leading EV company. Tesla bull Cathie Wood remains optimistic about the company's future. Keep watching so you don't miss this info. Star investor Cathie Wood once again seized a sizable chunk of Tesla shares several days ago after the stock extended a recent skid to its lowest level in more than 2 years. It can be noted that Wood has bought Tesla shares several times since October. Wood's ARK Invest bought 74,862 shares of the electric vehicle maker across 3 of her exchange-traded funds, according to a daily transaction report sent via email. The purchase was valued at around $11.7 million based on the December 14th closing price of $156.80. This purchase by ARK also came after Tesla CEO Elon Musk sold approximately 21,995,000 shares of the company, or roughly $3.6 billion worth, during the 3-day period ending December 14th, according to a regulatory filing shown after the December 14th market close. ARK's Tesla buys comprised 61,537 shares for the ARK Innovation Fund (ARKK), 10,066 shares for the ARK Autonomous Tech and Robotics ETFs (ARKQ), and 3,259 for the ARK Next Generation Internet ETF (ARKW). Tesla is the third largest holding among ARK's suite of investment products after Zoom Communications (ZM) and Exact Sciences (EXAS). Wood's dip buying spree comes during a difficult month and year for Tesla as concerns intensify among investors regarding Musk's Twitter distraction. Notably, Tesla stock is down more than 19% in December so far and roughly 55% year-to-date. ARK's flagship ARK Innovation Fund (ARKK) is down around 13% this month and 64% on the year. Wood, a longtime Tesla bull who has referred to Musk as ARK's Renaissance man, remains unshaken in her conviction. Most other auto manufacturers, unless they want to lose money on the cars, most are not going to be able to keep up with or reach Tesla's combination. So that's very important from a performance point of view and a range point of view, said Cathie Wood. When asked about her thoughts on Tesla in 5 years, Wood said that compared to other auto manufacturers, Tesla definitely has an edge. She said that if one analyzes cars not by brand, but by range and power combination instead, Tesla is the best pick among them all. Still, she said that most famous car brands like Volkswagen and BMW have done wonders in the last few years. It is just that Tesla is way ahead of them in terms of the range and power combination. Wood said that most other auto manufacturers are not going to be able to keep up with or reach Tesla's combination unless they want to lose money on their cars. Wood emphasized that that's very important from a performance point of view and a range point of view. When asked about her thoughts on large corporations competing with Tesla in electric vehicle production, Wood has this to say: "They are failing miserably. Branding is something different. These other auto manufacturers have brands and a lot of brand loyalty, but I think that as consumers start to shift from gas-powered to electric and look at the specs of the different cars," says Wood. She said that although they might still be persuaded by brands only, they won't have as good an electric vehicle as Tesla will provide. In a Yahoo Finance interview, ARK's CEO Cathie Wood emphasized their belief that gas-powered vehicles are going to be obsolete within the next 5 to 10 years, and the traditional auto industry has to figure out a way to migrate to electric vehicles. In mid-October, another ARK executive expressed optimism about the leading EV company. During a CNBC's Squawk Box interview, ARK Invest CFA Tasha Keeney shared the reason for ARK's positive stance on Tesla. Keeney said, "Electric vehicles are just single-digit percentage points of overall auto sales, so we have to remember that it's still an early market. But we do definitely see Tesla as one of the market leaders both in electric vehicles and in autonomy." In a more recent Yahoo Finance interview, the ARK founder and CEO said she was not concerned about Musk's leadership at Tesla. This is amidst growing concerns from investors that Tesla CEO Elon Musk has been losing focus on the EV company as he is spending much of his time at Twitter. Wood told Yahoo Finance that Elon's main role at Tesla right now is moving it towards an autonomous taxi platform, which I think will happen in 2024. I think he thinks it will happen next year. I think he's as focused as ever on that. According to ARK's updated open-source Tesla model, Tesla's prospective robotaxi business line is a key driver by contributing 60% of expected value and more than half of expected EBITDA, or earnings before interest, taxes, depreciation, and amortization in 2026. Across the simulation set, they expect electric vehicles to constitute 57% of the company's revenue in 2026, although at substantially lower margins than the robotaxi revenue. Because of ARK's increased conviction in Tesla's ability to achieve full self-driving, they have to be updated with how the robotaxi business feeds into the model. Although in the past they predicted that Tesla will never be able to launch autonomous ride-hailing, recent positive innovations from Tesla made them change their mind and assume its launch in 2026, 4 years later than Musk expected. They also suggest that Tesla will commercialize autonomous ride-hail in 2024. However, in 9% of their model cases, Tesla does not commercialize robotaxis within the 5-year window. If and only if robotaxi commercializes within the forecast window, the modeled financial results for Tesla are susceptible to the year of launch. ARK Invest's updated model also increases Tesla's capital efficiency. Tesla's capital expenditure per incremental unit of capacity had improved from around $84,000 in 2017 when the Model 3 was ramping up to around $7,700. In last year's model, they estimated that Tesla would spend $6,000 to $8,000 per incremental unit of capacity in 2025. Given its much better than expected capital efficiency, it may be safe to assume that Tesla will spend $2,000 to $7,000 per incremental unit of capacity in 2026. ARK's price target for Tesla is $4,600 per share in 2026, with the updates in their recent model. Their bear and bull cases suggest that Tesla could be worth roughly $2,900 and $5,800 per share in 2026. If this happens, Tesla stock will be impossible to buy for any average American and will only be affordable to institutional investors. However, note that this model was conceptualized prior to the stock split in August. The ARK Invest team also pointed out that they expect Tesla's robotaxi to be a game-changer for the company. By 2026, if Tesla successfully launches robotaxis, the expected value is the average of all 1 million simulations. Said simulations are highly sensitive to the year when Tesla finally launched robotaxis. In most of ARK's lowest price per share scenarios, Tesla launches a vertically integrated human-driven ride-hail service but does not launch a robotaxi network, while in other scenarios, Tesla does not launch either service. While the company has not committed publicly to launching human-driven ride-hail, ARK detailed previously the strategic and tactical advantages of doing so. Importantly, human-driven ride-hail could become a profitable recurring revenue stream before Tesla launches a fully autonomous service. For cases in which Tesla launches a human-driven ride-hail service and solves for fully autonomous driving, ARK assumes that its human-driven ride-hail cars will transition to the autonomous ride-hail network over time. If it is unable to launch a robotaxi service within 5 years, Tesla still could launch a human-driven ride-hail vehicle while trying to solve for full autonomy. On the other hand, in ARK's many higher price per share scenarios, Tesla launches a robotaxi network in the next 2 to 3 years. In a published article, ARK Invest stated that, although tuned to our expectations for 2026, we believe our Tesla model is methodologically conservative. We assume the Tesla stock will trade like a mature company rather than a high-growth one in 2026. Bullish analysts and investors believe that Tesla will continue to take the leading role in the electric vehicle revolution that has finally gained traction. They also believe that Tesla will lead in other green energy fields, such as solar panels and energy storage devices. Bearish analysts and investors, on the other hand, feel that the company will fail to live up to expectations and will just become another production company rather than something innovative and special. Bears view the company as overvalued, susceptible to competition, and overly subsidized. That said, Tesla's stock price targets show considerable variation. The average 12-month price target for Tesla stands at $302.05 according to NASDAQ, which is twice its current valuation at $150 per share. However, the most bullish 12-month forecast for Tesla stock stands at $760. Meanwhile, the most negative analyst covering Tesla sees shares dropping to $73 within 12 months. Overall, there's a wide variation within the investment community as to the near-term future of Tesla. Cathie Wood, for one, views the current dip as a good time as any to buy up more Tesla shares. Subscribe to this channel and have a great time watching more of our Tesla stock videos.